Hi, this is Adam Anderson, owner of WealthGuard Advisors.
Hello, I'm Blake.
Thank you for being with us today. We're talking about the market, but before we do that, let's talk about some disclosures. We may or may not have interest in buying or selling the stocks that we're talking about today. Past performance is no guarantee of future results, so read the prospectus and disclosures carefully. Blake, let's talk about the market.
Yeah, things have been looking really well. I think after the Federal Reserve rate cut last week, we're pretty much all signs are green. We're seeing a lightening of regulatory burdens. So until things change, I think we're going to keep this upward trend.
I mean, it is scary. I mean, really at the high end of the trend. We've talked about this quite a bit. We are brushing up against that 7,000 level on the S&P 500. So that is kind of maybe a psychological barrier. If we could get above that, there's a lot of groundswell underneath the market that's helping this market along. We've talked about how September is traditionally a bad month, not this year. So, yeah, we're seeing that this is pushing new highs, and there might be justification for that. I think one of the things that justifies this a little bit is we're seeing this movement of factories into the U.S. We talked to about Eli Lilly. They just finished building a big facility in Charlotte, North Carolina. They're building like 4 or 5 new facilities in the U.S. Uh, Apple is building a large facility in Kentucky. They're moving all their glassworks in conjunction with Corning to a small town in Kentucky, along with other facilities that they're going to be starting to build out. So we're seeing those are just like two examples, but there's a number of companies that are building in the United States and building big facilities, factories. And that's what I want to talk about. Some of these companies that are benefiting from this, not the home builders, but industrial builders. So like Jacobs Engineering, Mastech, Quantus, which a lot of our clients own, symbol PWR, Emcor, which I want to talk about right now, Argon, a symbol AGX. These are all moving up in a steady way. But let's talk about Emcor first. So here we are on a 6 month chart. We are seeing it move up steadily today. It did get added to the S&P 500 just recently. So we are seeing a spike in people buying it. And this is a really good sign for a company that it's been added to the S&P 500. And what I wanted to talk about is that this is actually trading at 26 times earnings, I believe, right now, which is what the S&P trades at. So even though this has gone up astronomically in the last 5 years, 550% in the last 5 years, that seems like, yeah, gosh, this thing is high. It may have more room to grow because the growth, their earnings growth is greater than their price. So it's only same as the S&P 500 right now, and they've got a lot of contracts coming down the pike. Anything you'd like to add to this, Blake?
Yeah, I think it's just important to note that the large volume spike we saw on Friday related to being added to the S&P 500 doesn't necessarily change anything fundamentally about the company, but we do historically see an upward movement in the stock in the few weeks following an add into an index like the S&P 500. So it's a very good sign for the company in the near term and also in the long term. It provides a lot of stability where this company is going to be held by a lot of funds, and so it won't be driven as much by stock specific, individual company specific things. It's a little bit insulated once you're in one of these indexes. So a very good sign for the company.
Yeah, a lot of people own the S&P 500. There's a broad holding in the throughout the world, especially the United States. A lot of people own the S&P 500, and that's part of it. You wanted to talk about Google, if I was not mistaken, Blake. Is that still true?
Yeah, Google. And for my pick this week, I want to highlight Google. Obviously, we've held Google for a long time. For a lot of clients, continue to hold it. But I think when you compare it to the other tech AI leaders in the market, the Mag 7 that we've been talking about for the last couple of years now, Google is just about the cheapest of them on a PE ratio uh, compared to things like Tesla that are obviously pretty extremely priced. But even Nvidia is trading significantly higher multiples than Google is. And yet Google, that just got relief from the regulatory, they got cleared on the antitrust suit that was going on last week. And they are a huge player in AI adoption. I was looking into their new language translation tools that they're adding AI into and the amazing technologies they've got there. And they're also got their fingers in everything. That's why their company name isn't Google, because they aren't just Google. It's an alphabet. And they have a number of other technologies that they've integrated into their suite of offerings. And I think it's a good pick right now compared to the other Mac 7 market leaders.
Yeah, and also I use their Gemini AI, that and the ChatGPT and some others, but that is going to be integrated into the new Apple phone. So that is going to be the standard on the AI assistant on the Apple phone. So they are got this connection with Apple that can be really be an additional boost, even though they still are the lead search in the world as Google. But they have a lot of other things, Waymo and other things. So yeah, I mean, I think it's cheap. It's like 28 times earnings, basically in line with the S&P. So it's not expensive in relative terms, even though it kind of looks like it. I still think it's got a lot of upside and agree to all your comments there. That's one of the things that we do here at WealthGuard is help people make. One is we use a broad exposure to the markets as far as like an S&P 500 or market index type of things. But then we try and find companies that are more likely to beat the S&P 500 over the long haul. So we'll pepper a person's portfolio with individual holdings like a Google or an Emcor to help them give that potential. But when you own a concentrated position, it does give you greater upward, but you also have to protect it on the downside. And that's really what WealthGuard does is put together a stop loss strategy to protect your positions. Really, we should expand on this because I use alerts, not stop loss, because you don't really want to get stopped out always. But we do use alerts to help protect your money. That's kind of WealthGuard philosophy. WealthGuard is a registered investment advisor, makes us fiduciaries. If you have planning needs like Social Security planning, you're 62, 65, you're ready to go into retirement, we can help you make the most of your Social Security benefits. You're looking at Medicare. We have a specialist that we work with that talks about Medicare. We can help you with that. Or just income planning. You want to look at what kind of income you could generate to support yourself in retirement. These are the things we specialize in. Asset management, custom to you on a fiduciary basis, fee only, no cost to set up an account, no cost to close the account, just what you pay us as a flat fee, like a mutual fund. And also financial planning to make sure you're on the right track to meet your goals. So I hope you take the time to come talk to us. We're here for you. Thank you for listening. Have a great day.